All right, so we're going to make a start. My name is Benga Ibikunle. I'm a professor and chair of finance at the University of Edinburgh up in Scotland. And it's my pleasure to welcome you to this afternoon's panel session on global carbon trading. Now, carbon markets are playing an ever-increasing and important role in our efforts to transit to a low global carbon economy. Specifically, they are acting as tools for correcting the market failure that is at the heart of climate change. However, there are...
Sorry, at the back with the sound, could we get the volume up a bit, or can we all do it? We can't. Sorry, guys in the audience, all our audio's down a little bit, so we can't hear what's going on, so we're just fixing that first.
I think I can hear some rumble of the audience as well. But I guess that's the way it is. There's nothing we can do about it.
So you'll hear it.
Okay. Are we good to go? It's not optimal, but...
Let's check. Can the audience hear us okay?
Great. Everyone can hear us, and then we continue. Okay, so what we're going to try to do this afternoon is to discuss some of the opportunities and the challenges that are associated with the deployment of carbon trading as one of the tools to address the market failure that is at the heart of climate change. And joining me to do this, to help us do this, to help us have this discussion and set us on our part is a brilliant panel that includes from the far end, Naomin Tan. Naomin is the Regional Director for Europe at the Singapore Economic Development Board. Thank you for joining us, Naomin. Next to her, we have Mira Atreya. Mira is the Director of the Carbonization Science and European Advisory at Carbon Direct. It is a science-led carbon management company. And next we have Anna Carolina Zaradel Shilko. Anna Carolina is a Technical Director for Markets and Standards at Voluntary Carbon Markets Integrity Initiative. At VCMI, Anna Carolina leads the organization's technical work and manages its expert advisory group. And finally, we have Rich Stockdale. Rich is the founder and CEO of Oxygen Conservation, an impact-focused natural capital portfolio of natural assets. So this is the session plan. We're going to start off with a few minutes of opening statements, each from each of our panelists. They're going to say a little bit more about what their organizations do, what they do there, as well as provide some comments on some starting points that we have previously agreed on. Afterwards, I may have some follow-up questions for clarifications, and we shall come back to the audience for more questions after that. Hopefully, that should take us to about 1 hour. So we're going to start with Naomin. Would you like to begin by giving some thoughts on the perspective of the Singaporean government on developing the carbon services market, focusing on opportunities, particularly in Southeast Asia?
Thanks a lot, GB. I think all of you can hear me. Sorry, this is a bit disorientating, but... So my name is Naomin, and I'm the Regional Director of the Economic Development Board. The EDB in short, we are a government agency that develops and executes Singapore's economic strategies. So basically, we undertake investment promotion as well as industry development across the manufacturing as well as tradable services sectors. And that includes the carbon services and trading sector, where we have partnered with international businesses on how to support them in looking out for carbon project development opportunities in Southeast Asia. So in my introduction, I would like to cover 2 key points. The first on Singapore's interest in the global carbon markets, and the second is to share our ambitions in becoming a lighthouse in Asia for carbon services and trading. So to jump quickly on the first point as to why the global carbon markets is relevant and important to Singapore. If you look at Singapore and where we are geographically situated, we are sitting at the heart of Asia or Southeast Asia. And basically that means that we are in close proximity to where the carbon project opportunities and demand are coming from. And it's also a region that is undergoing a low carbon transition and one that has a big role to play in the global climate agenda. So that's also one reason why we are very actively working with our neighboring countries to promote the development of the carbon markets. And estimates have also shown that nature-based solutions can be very effective carbon sinks as well, providing up to about 30% of the global mitigation efforts needed to meet the Paris Agreement targets. So Southeast Asia alone holds about 20 to 25% of nature-based solutions supply because we have a very diverse range of ecosystem that is rich. So you have ecosystems like rainforest, wetlands, peatlands, so on and so forth. And therefore the region's potential to drive sustainable outcomes really lies in its ability to harness the natural resources to drive sustainable outcomes as well as to embrace innovation solutions. And therefore, the countries in Southeast Asia are also very cognizant of this potential. And we also recognize the urgency that is needed, right, to address the global climate crisis. So many of the countries in Southeast Asia have set net zero targets, Singapore included, and many of us have either implemented or are considering implementing some form of carbon pricing. Singapore, for instance, we were the first country to do so back in 2019. We started off at a very low base of about 5 Sing dollars, which is around €3 per tonne, to help companies first transition into this. Today, that is around €16 per tonne. Next year, it's going to rise to about €30, and by 2030, we expect it to be between 35 to 55 euros per tonne. So that sends a strong signal to companies to internalize their cost of emissions and to invest into decarb efforts, but also provides the impetus for carbon services and trading firms to support us in this ambition. The other reason why we're interested is because Singapore ourselves, like I mentioned, we have a net zero target to reach by 2050, which means that we are going to be a buyer of carbon credits. And therefore, we want to work with trusted partners globally to access high-quality Article 6 credits. And on this end, actually, I'm pleased to say that we have already signed 7 implementing agreements with 7 countries across Asia, Africa, as well as Latin America. And we are on track, hopefully, to sign another 15 more or so that will allow us to access Article 6 credits. Thank you. So then that's basically our interest in this space. The other point I wanted to raise is basically how Singapore then sees ourselves as potentially being that lighthouse in Asia for carbon services and trading, right? So we know that government at some point also needs to step in to help catalyze the supply of Article 6 credits and to help overcome some of the barriers in this market. So I'll just sort of share 2 examples in terms of, beyond creating that marketplace, we also strive to become a center of expertise, innovation, and high quality carbon solutions to drive impact. So really working with partners to transform climate ambition into action. So the first example is with regard to the carbon markets, we do recognize that there is always a gap in early stage financing when it comes to project development. So last year at COP, we announced we launched the Carbon Project Development Grant, which is essentially a pilot grant scheme that is meant to support project developers to set up a team in Singapore to do project development, project financing, and also covers associated costs when it comes to developing projects. So looking into things like feasibility studies to assess the feasibility of doing a project in Southeast Asia. The other example I'd like to share is also actually creating a platform for different stakeholders to come together to speak about the challenges or opportunities. And that's where then together with IETA last year, we launched the Singapore Carbon Market Alliance. So that really brings together stakeholders across the value chain to convene and to build and share knowledge around Article 6 carbon credits, and that informs the Singapore government as to how we should go about designing our policies, regulations, so on and so forth. So broadly, that's really our interest and ambition. Today we have over 150 carbon services and trading firms that have established themselves in Singapore, and we very much welcome more to come to Singapore and to partner with us. So if any of you are interested, we'd be happy to speak more to you after this. Thanks.
Thank you very much, Naomi, for getting us started. You mentioned some of the price ambitions that you have at the SCDB, so something around 50 euros per ton of CO2 equivalent. And I noticed that Rich smiled as if that wasn't quite up to scratch. You want to say anything about that, Rich?
Yes, hello, thank you. I love the infrastructure building you're doing there to set the systems and processes in place for a future market. My world's slightly different. I exclusively work in the voluntary carbon market sector. And I just spoke on that stage there where we announced a new world record for the sale of nature-based carbon credits. So we've just sold 8,000 tonnes of the premium natural capital product from the UK you can get at £125 a tonne, which is £25 more than there's ever been paid on the planet before. And the reason we're able to do that is because of integrity, authenticity, the quality of every aspect of a product. The reason that price point's important is we have to move the entire environment sector from a grant-based moral endeavour into an absolutely capital opportunity that investors are chasing. And I was thinking, like, at the moment, of course, you have to stimulate that market and offer people grants and support. But quite quickly, in the same way that we saw in Silicon Valley, the venture capitalists are going to rush in because there's going to be so much money to be made in nature-based solutions that we're going to be falling over ourselves to not take that financing. The biggest challenge doesn't sit with money. Investors are agnostic. Who doesn't want to put their money in an environmental solution as opposed to gas and oil? The sector just hasn't offered the products or the investments that are market standard yet, until us and until now.
Thank you very much, Rich. So, Mira, I'm going to come to you next. I think the natural question for us to then ask is, what constitutes good carbon credits, the quality carbon credits that can attract significant amounts of money, enough to encourage us to decarbonize and to invest in low carbon innovation? And what is the approach of your of Carbon Direct to this?
Thank you. My name is Mira Atreya. I run the European office of a company called Carbon Direct, just to briefly introduce what that is before I answer those questions, and you'll understand why it's relevant. We're a science-based carbon management company, so we help organizations take their climate goal into climate action, and we do that through strategies for net zero. So that's depending on meeting a company where they're at, so that might start at measurement of emissions and setting of targets, implementing reductions across the company and operations and supply chain, building high-quality carbon removal credits into their corporate climate plans in tandem with emissions reductions. And then what we're probably best known for is our deep technical diligence on carbon removal projects, which I'll speak more about in a moment. And related to that, we also provide access for buyers to high-quality carbon removal supply and do a number of technical work, pieces of work on decarbonization. So we just released a report with Microsoft on market-based mechanisms to decarbonize the built environment related to environmental attribute certificates for low-carbon cement and low-carbon steel. Just to address some of the themes of this panel, which are kind of barriers and opportunity, to Rich's point, we have a barrier right now, which is around market integrity and credibility, and has driven a lot of skepticism of carbon trading instruments. And my words today will be predominantly focused on the voluntary carbon market for that. So this has affected a lot of corporate willingness to engage, because not all of the credits out there are of high quality. But we've actually seen some positive news in that, this year the volume of durable carbon dioxide removal that was contracted is actually double what it was last year, so about 15 million versus 8 million tons. But we have a bit of a problem in this market in that we really, really need more buyers. And we need to diversify that buyer pool, and maybe some of you in the crowd would be part of that. And the standards I'll speak about in a moment are part about, and the good work that VCMI is doing is around trying to help build that integrity in the market so that buyers feel confident to engage. And the reason we need to diversify this buyer pool, as an example, is that last year, 80% of all the high durability carbon removal pre-purchases came from a single buyer, which is Microsoft. We do a lot of work with them, but this is not how you scale a market. It can't just be a single organization who's doing a great job. It needs to be much bigger than that. If I move on to kind of what, there's an opportunity there. Again, kind of touching on the theme of this panel, which is that we have many opportunities to provide this forward financing such that organizations can get the financing deals that they need by knowing that they have that forward offtake from organizations like Microsoft and hopefully others, right? Sorry, just a moment. Now, in terms of what constitutes a good carbon credit, quality, like I mentioned, is a big question in the voluntary carbon market, and there's actually a big oversupply of low quality carbon credits. And in our assessment, we are seeing high quality CDR representing just 4% of the VCM. I'm happy to say that's up from 3 over the last couple of years, but obviously far below what we need to scale this market with integrity. And in its simplest form, a good carbon credit is one that provides positive outcomes for both for climate and for communities. So it's a market that really could have and does in those limited high quality cases provide really good outcomes, and that's what we're trying to build here. So in terms of defining what good looks like, we're mostly a team of scientists and engineers, myself included, and we've published every year for the last 4 years, and the next one's coming out next month, with Microsoft, our criteria for high quality carbon removal. And so this is very technical with each different types of projects, so forestry projects, marine-based projects, direct air capture, mineralization, etc. And some of I think it's worth mentioning kind of what these core criteria are and maybe providing a simple example. I'll give you a biochar example. So the one criteria is environmental harms and benefits. So this is not just about carbon accounting, right? It's about, is the feedstock from a sustainable source in this example? Social harms, benefits, and justice. So does the project actually benefit local farmers? The production revenue from increasing the fertility of the soil from applying that biochar. Additionality and baselines is another criteria. So does the project demonstrate that it would not have occurred without that project finance? That is the whole point of this market, right? Is to get something to happen in climate and to provide a climate outcome and a community benefit that wouldn't have happened without your financing. And that's why that price point is so important. And that's why it doesn't end up being a couple dollars a ton. It ends up being really substantial because you need that funding to get something over the hump. And that's what this additionality point is. But you also need to be able to measure and report and verify what these benefits are, and so having a quantitative life cycle for your biochar, for example, on the biomass harvesting, how it's transported, how it's the emissions when you're doing the pyrolysis process, etc. Durability, how long is that carbon stored for? That's also another factor and a criteria element, as well as leakage, which means are you driving, are you displacing a negative outcome somewhere else? So maybe. So it's really looking kind of at the bigger picture of the project that you're financing. Are you, accidentally driving a market change somewhere else that might have a negative outcome that kind of counteracts the positive that you're trying to do? So as a buyer, for those in the audience, I would really ask yourself, does the project provide a genuine additional benefit? Does it catalyze the industry? Is it really moving the needle and having, positive impacts on the surrounding communities? Does it have indirect negative impacts or economic leakage? And so thinking through, if you're doing a forward offtake, so a project that's starting to be developed and hasn't happened, like what are the risks to project delivery? So those are the things that you would really need to think about. And what I do want to emphasize is that there are many different technologies for carbon dioxide removal, and we need all of them. All of them have their strengths. There are great projects in every vertical. There are bad projects in every vertical, and there's no silver bullet here. We absolutely need nature-based projects. We also need engineered projects, and ultimately, again, our goal is to lock away carbon emissions and have positive climate and social benefits as well. The way that we approach this at Carbon Direct, we have done more than 800 project-level diligences. We have a very large science team. I think we're 65 now. And for Microsoft alone, we've done over 100 project reviews and then dozens of very deep diligences. We provided the technical diligence to enable Microsoft to purchase the largest individual carbon removal agreement to date, which is maybe that's which is 8 million tons of over a 20-year.
Hold on, doesn't that deserve a round of applause? What amazing work getting that together.
Thank you. Credit to our forestry team. And then also, the diligence on behalf of Microsoft. Carbon Direct did this for the largest bikers or biomass-based carbon removal deal on a biochar facility in Bolivia, or a 10-year agreement. So this is really about the way that we approach this is, again, from a very scientific and technical perspective of deeply engaging with project teams and local experts, where we're doing deep diligences, that might be on the ground, engaging with communities. And as we interview kind of the project developers, there's a lot of information that's not just in the project documents, but that you get from having this an extensive team of scientists that we have at Carbon Direct across a range of different niche fields. The reason we have a 60-person science team is because there are so many types of projects and technologies. So it's a very detailed type of approach. And the point here is to try and help an organization understand, is it delivering those high quality criteria that I just described? What is the potential for that project to deliver? Is there a risk to delivery risk? And the whole point here is to allow finance to flow towards those projects that need to scale, that are having positive impacts on climate. I'll pause there.
Thank you very much, Mira. I just want to pick up very quickly on the issue of Microsoft having such an outsized influence when it comes to the price discovery process, the price of carbon credits in VCM. If we continue to have this approach where there are significant whales will basically set the price because of their outsized influence, is there a future for VCM without some sort of policy support to spur demand?
So ultimately, the way I see the VCM is as our currently a bit of a sandbox where we need to explore how do we scale this with integrity. And I'm excited to hear the remarks from VCMI on this, who's really helping catalyze this, such that we can get to a point where it can become regulated. We need to prove that it's possible, that there are high quality projects like Rich described that are delivering the climate benefits, and that we have buyers who are interested in that. But it ultimately cannot be one buyer being 80% of the forward offtake. So I see this as...
It's not sustainable, is it?
It's not sustainable. So, I hope if there are buyers in the room that we can help, you understand how to engage in this market and how to assess quality and where to find those projects that are really delivering the benefits that you might be after. But this is a way to prove that a market can exist and that a market can catalyze good things, so that I hope it does need to be regulated at some point, because we are so far away from the scale at which the IPCC has set out that we need carbon removal to be at from a climate forcing perspective by 2050, even if we achieve the very steep emissions reductions, which I hope we do, but we're terribly off track to do. And the fewer reductions we achieve, the even more carbon removal that we'll need. So there's the very, very big climate necessity to scale CDR in particular, in tandem with the important work that we need to do on emissions reductions.
Thank you very much, Mira. Anna Carolina, I need to come to you now. We're still on the question of what constitutes quality credits, and the MRV, the monitoring, reporting, and verification processes are a significant part of this. what are the latest developments? Industry-wide standards, for example. Are there any?
Yes, okay, let me come to that. Hi, everybody. I represent the VCMI, Voluntary Carbon Markets Integrity Initiative. It is a bit weird speaking like this, but I think I'll get over it.
It takes some getting used to
Yeah.
in a couple of
A
minutes.
few minutes, I'll feel normal. I am going to build because she has made at least 15 really good points that I want to build on. So let's at least 3 of them I'll try to cover. So yes, coming to high quality carbon credits. That is something that ICVCM has been working on and building on. We defer to ICVCM when we talk about what does a high quality carbon credit mean. You have the 10 core carbon principles. It has to be additional, it has to be permanent, it has to contribute with local communities. All of that we've copy and pasted and said this is the work we need to do. What's interesting is that a couple of years ago, when we were running researches, Women in Business was running researches with companies asking what were the barriers. And basically one of the first things that they said was we need clarity on what does a high quality carbon credit mean. We need to understand what integrity means. We need clear guidance. And then ICVCM published the core carbon principles 1 month after VCMI had published the claims code of practice. So these are 2 organizations that we deal with each other as sister organizations. We collaborate, we work very closely. VCMI has been set up, it's a non-profit organization. It has been set up as a decision made at COP 21 in 2026 by Alok Sharma, by having concluded that there was the need to create an organization to establish the rules, some rules around the demand side of voluntary carbon markets, which is VCMI, and on the supply, which is ICVCM. So basically what we've done with the claims code was to establish a step-by-step process for those companies and non-state actors willing to engage and make voluntary use of carbon credits with credibility and with integrity, knowing how they can do that. What is the step-by-step? So of course, first of all, you need to establish and publicly disclose a GHG emission inventory according to the GHG protocol methodology, or an adaptation from it in case some countries have done that. In the case of Brazil and Japan, for instance, the company needs to establish a near-term emission reduction target. We have intentionally focused on near-term, which needs to be consistent with the long-term, but we understand the urgency of the problem and that action is needed right now. Companies also, if they do have a public policy advocacy in place for climate change, that needs to be aligned with the Paris Agreement, or at least not go against it. And we also established a set of indicators, let's say inspired by climate transition plans. We didn't make that a requirement, but we tried not to give a false wrong incentives for companies. So we want them at one side, from one side, we want companies to be making claims every single year. So we want to understand the progress that they're making. The situation we have right now is that thousands of companies have established their near-term emission reduction targets. But if that's going to be delivered in 5 or 10 years, between now and then, we don't know what's going on. And a lot of those companies, let's say 47% according to MSCI, are not on track to deliver those targets. So we want to know exactly what is taking place every single year. But at the same time, we also want the companies to assess the full spectrum of possibilities they have for mitigation measures if they are considering their marginal abatement cost curve. So not only focusing on measures that will deliver short-term, 1-year emission reduction, but also those projects that we understand, those mitigation measures that we understand are more costly, will deliver impact, but do take more time for the board to make a decision, are going to cost more money, so they have to invest on it. And we want to also recognize that. So we ask for indicators, finance indicators, governance, strategy indicators, also to recognize the effort being put in place by companies. These are for companies, it has been established for companies that are going above and beyond, that have either met their target or are making progress to do so. But of course, we understand that not all the companies are there. Actually, the majority is not there. So we have recently released the Scope 3 Action Code of Practice, derived for companies that are making progress in Scope 1 and 2 emissions, but facing barriers, which is one of the themes of the panel, specifically in Scope 3 emissions, and really trying to understand that. So first of all, on the question of the MRV, I think what's important is that it comes across what we established for the Claims Code of Practice, the Scope 3 Action Code of Practice, and lands on the Monitoring, Reporting, and Assurance Framework we have developed. We have Aisha Rodriguez here, my colleague from VCMI, who has led that work beautifully. And what we need to ensure that is an important part of integrity is transparency. We work with radical transparency. So 95% of all the information we require, documents, evidentiary information, needs to be publicly disclosed by the companies directly. On top of that, we're also developing and are about to launch a dashboard, which is going to be a public facing platform, which is also going to publicly display all the information pertaining to the credits that have been used, purchased, and retired to make VCMI claims. So that is of utmost importance. And yes, I think it has been evolving, but there are many registries in the space right now, and they still lack transparency. That's why we took that further step. Coming to the barriers, one of the points that Mira has made that I think it's really important, yes, of course, now we lack the business case. One of the main drivers for companies to engage in voluntary carbon markets, especially coming from countries where you still don't have a compliance market, was the compelling case. Was that they could actually come to their clients, their investors, their peers and say, we are doing this, this is important, we believe in this cause. We're not doing it because we have to do. We do it because we know it's important. That has become a reputational risk at the moment, as she was rightly so putting. And that is an issue right now. So companies we're talking about greenwashing, now we also have to talk about greenhushing. All we need to do is exactly the opposite. All we need to do is embrace companies and embrace the effort, recognize the effort, understand the barriers that are in place, and try to come up with the solutions together for companies, for sectors, for specific jurisdictions. One of the sectors that came after us as soon as we released the claims code was the financial sector, saying, what is in there for me? And we definitely said, not yet, just hold it a little bit, because it's a completely different problem. We are not that much interested in their direct emissions, because of course we're talking about just a few buildings, but much more about the influence that they have on financing projects through their clients and the emissions that derive from that. So we are also developing a white paper with financial institutions, looking at asset owners, asset managers, banks, insurance companies, to really understand the myriad of different roles that the financial institutions can play. What are the barriers that they are facing at the moment? So for instance, even if we have the legal treatment and definition of carbon credits being different in different jurisdictions, that's already an advancement. Because at the moment, if you don't even have that clarity, that makes it very difficult for the financial sector to engage with. There's a lot of lack of knowledge even within the institutions, so they are playing the role of educating several stakeholders. So even going above and beyond in that sense, by going not just doing their business as usual and historical role that they have been playing, but doing things that they understand is important at the moment, so that the market can scale up. I can go on because the topic is huge, but I'll pause here.
Can I
and
just
happy to take
build on one point, which is the radical transparency? I think
I didn't expect that I was going to be gatekeeping with regards to time today, but you have just 1 minute, Mira.
Very quick. I think that the transparency is really key to credible claims, right? So not just helping the market learn. Microsoft, for example, has been very transparent about what they do, why, what their learnings are, where it has gone well, where it hasn't gone well, and I think that has helped the market learn, and being transparent about what the benefits of the project you're funding are, and not overstating what they are is just super important and can really help this scale.
Thank you very much. Rich, now back to you. Congratulations again on your land market announcement today. Let's talk about that price and pricing generally for you from as a project developer from your perspective. How do you approach it?
Thank you. Just before I touch on that, I'm going to have a mini rant. So, why on earth do we hold the environment sector to a level of standards and expectations that we don't hold anything else? When have you ever walked into a car dealership and said, what is your local social impact? What additionality do you offer for this vehicle over another one? It's ludicrous. Everything that was said was delivered eloquently and wonderfully and scientifically correct. But we're not competing in a fair market. You don't go to a restaurant and say, oh, what is your social impact? What are you doing for your neighbour? You know, how are you giving me more calorific value than something else? It is insane. We're currently operating in a way that completely misunderstands how people buy anything. Now, you were right about Microsoft having such an effect because that's one big buyer who is making a pure data-based, quality-based decision. But that's not how all of us buy. The choices we make are what excites us, what makes us interesting, what we want to be associated with. To get all the rest of those buyers in, we've got a marketing and a branding problem. We heard about 65 scientists. We need 65 marketers. We have got a marketing problem. This shouldn't be called the voluntary carbon market. It should be called the private carbon market. And that's when we can inspire people with charismatic carbon, with nature, with biodiversity, with people actually accessing and enjoying the landscape. And that's how we have got a transformational price. We haven't gone in there. Yes, we've got the basis of the foundation of the science that's there so people have the integrity of what they're purchasing. But it's the story, it's welcoming people to the estate. We literally built a pop-up cafe on an estate for the law firm that came in to buy our carbon credits. We served them locally sourced tea. We served them the best coffee we could from an independent coffee supplier in the area. We created a narrative and a story for a special product. If you create a commodity, we're going to sell a commodity price. Carbon credits shouldn't be Coca-Cola. They should be unique, special projects linked to places. That's how we drive up a price. And that's on all of us to produce a better product, better levels of service in the sector, and demand a higher price for it. That £125 a tonne is great. I had a fantastic guy walk up to me as I got off stage and said, we're hoping to announce 150 next week. Great. And then we need 250 and 350 and 1,000. And we're going to see those same leaps that we've seen in Silicon Valley. I told the story earlier. Amazon IPO'd at 450 million. It's now 10 billion. That's what's going to happen in the natural capital sector. But only if we start talking to all the buyers in the way they understand. The Microsofts want the science. Other people want stories and charisma and marketing. Look at the products you buy and ask yourself why you buy them.
Thank you very much, Rich. Anything else you want to say regarding how you approach pricing? It's the marketing, the core aspect of it.
It's everything. So my team will be yelling bingo because I have a scorecard where I say certain phrases and they count them. How you do anything is how you do everything. If you're going to sell a premium product, everything you do matters. I don't even allow the word tender to be used in our business because tender means cheap. So if we have to have a partner, we have an invitation to partner. When you visit our states, the signage is wonderful. We only sell carbon. We've done one carbon deal because we think the price of carbon is going to go through the roof. We're about to publish a forward pricing curve for premium quality UK carbon. We're going to see that come to hundreds in the future because we have the opportunity to lead the world in this in terms of the legal structures, the integrity, the science you talked about, but also the limited supply and the really special nature of what we've got. Over the last 4 years, we've built a portfolio close to £250 million in valuation, 43,000 acres of land, and we will have close to 2 million carbon credits available, 3,000 BNG units. We manage land holistically for natural capital. But it comes back to viewing markets in different ways. You can buy a Vauxhall or you can buy a Tesla. A market will allow you to make a choice. You can buy cheap carbon credits or you can buy incredible carbon credits you can be proud of. Make the choice. All of us will. We're all responsible for driving that forward.
You think there will be enough demand based on this marketing approach across the entire economy to bring about the transition to low carbon innovation, to drive the allocation of capital to low carbon innovation? Because it appears that you're making an appeal to a specific group of people who perhaps have the spending power to be able to buy into what you're selling, but the general population may not be able to.
That's exactly what McKinsey said when they were pitched the mobile phone. They thought 1 million people globally would buy a mobile phone. Hands up in the room if you have a smartphone with you today.
I suppose everyone does.
Yeah, there you go. There you go. We can't envision a future that's beyond the realms of our understanding until we see it. We're all terrible at that. We're really good at seeing what's going to happen in a minute, but not in 10 years. You know, look at Netflix. They wanted to shop people DVDs through the post, and now how many of us have got Netflix subscriptions? People buy premium and they buy what they want. Now, will other products come in future? Will there be a differentiation in the market? Absolutely. We're seeing that now. We're seeing low-value credits, we're seeing standard, we're seeing added benefits, and we're seeing premium credits at the top end. It's the tip of the sphere that drives the market forward, but you need those innovative businesses doing things that drag the rest of the market along.
Thank you very much, Rich. So that is the developed world perspective based on, I believe. It probably will look differently if we're considering this.
We're exclusively UK based, so I talk about the UK in that context.
And that's why I want to come back to Naumin regarding the kind of issues that you observe when it comes to dealing with the establishment and deployment of projects and generation of carbon credits in the developed country and the developing country context. What issues are there? Do you perhaps have to invest in capacity building due to weak institutions in emerging markets?
Yeah. So yes, I do partially agree with what you mentioned, Rich. I think from the Singapore's government perspective, we also partner with countries that are at different developing stages, right? And of course, when you work with countries that do not yet have the right infrastructure or even the capabilities to trade carbon, I think that's where the Singapore government can step in and help them build knowledge around that. So there are a few things we are doing around this. We recognize that it's a joint effort, and there's really a need to help countries scale up in order to operationalize the Article 6 carbon market. So two examples to share. Actually, we launched, I think about 3 years ago, what we call the Sustainable Action Package. Sounds very fancy, but basically what it really does is it's a program that helps developing countries build up their knowledge around sustainable development as well as climate change. So we actually run courses together with our partners to help these countries level up their capabilities when it comes to things like climate adaptation, climate mitigation, helping them understand what are the risks to the country. And in the build up to that, we also, together with the Singapore Cooperation Enterprise, announced last year that we will run specific courses on Article 6 carbon credits. So this is really meant to level up the country's knowledge in terms of how they can get into the Article 6 compliance market. Because without the knowledge, actually there's really no way they can go around building up their own infrastructure. So we're quite cognizant that it takes a while, but it's really a much needed effort. So at the bilateral basis, we try to do that. And maybe, to Anna Carolina's point about having to develop standards. Right? Actually, Singapore has also, in the past, worked together with VCMI and ICVCM to develop guidelines on the voluntary carbon market. We will be announcing soon. Actually, we have already announced an initial set of recommendations to help countries go about Article 6 crediting. So we launched the Article 6 crediting protocol, which is essentially a set of guidelines to help countries understand what are the processes in order for you to trade Article 6 carbon credits. So I think, from the government perspective, I think that's how we can share our experiences with the rest of the governments.
Thank you, Naomi. Anna Carolina, you raised the prospect of this new term, greenwashing. So voluntary carbon markets have relied, as Rich mentioned earlier on the desire by companies to do what is right by the society and being moral in their pursuits. But what greenwashing appears to indicate to me is that policy can also be a driver for demand and in fact supply within the VCM. Without some sort of pull from the policy perspective, demand may continue to sag, and you may continue to have this kind of circumstance where there is one massive player on the buyer side and basically driving the oil price discovery process.
I was going to come back to that point of yours before, but it just let me. But thank you. Yes, totally agree, and we need that. And to prove that, we have just launched this morning a government coalition to grow carbon markets, being led by the Singapore government, Kenya, and the UK. We also already have the endorsement and participation, official participation of France, Panama, Peru. We're having conversations with Brazil, basically understanding that, as we have been saying, if companies lack at the moment the business case, what they need is more than integrity. We have developed the concept. Integrity from the supply side means that the carbon project needs to be additional. Integrity from the demand side means also that the carbon credits that are being used are additional to the decarbonization, direct decarbonization companies are making. But it's not just about making the market an integrity market, it's about providing trust to the market. It's providing a clear signal for companies. And that, at the moment, can come from two different places. The guidance is already there. We've done that. That's not enough. That's needed, but that's not enough. What we need now is, from one side, governments coming together so that they can build their own regulations if needed. That's not necessarily, but at least that they can come out there and say, for instance, the UK is having a public consultation at the moment, and they're asking about VCMI's guidance. They say, is this the way that companies should go? That gives a clear signal to companies already. The other way is also to get credible voluntary standards such as ISO, which is at the moment also developing their net zero standard and having clear requirements and recommendations that, as long as VCMI has already set very clearly what best practice means to companies. That gives a much better, a much safer space for companies to act on. And then, just reacting to the provocation that Rich has made, I would make a different suggestion on how to rename voluntary carbon markets instead of private carbon markets. I understand the need, again, of establishing the business case, but I think we need to start talking about high integrity carbon markets overall, and stop thinking about this as if we have a binary option of either voluntary or compliance. That doesn't happen like that necessarily. If you see legislation that is evolving in my country, which after 10 years have finally approved the market bill at the end of last year, you have a clause that says we are going to accept, let's say, a percentage of voluntary carbon credits. But if you frame that as a private, that I think that could be something more complicated. But what companies also need to understand at the moment is exactly as Naomi was mentioning, we have just updated the claims code to say, well, high quality carbon credits are not only the CCPs, but also A6.4 credits that are also going to be accepted for VCMI claims once they are available in the market. So companies need to understand the interplay between voluntary carbon markets and compliance markets. And there is a huge intersection. We need to understand how that come together.
Thank you very much, Ana Carolina. We have just about enough time for a few questions. Do we have questions from the audience, please? Right, we've got one in front here, and there's a microphone
Mic is
coming
coming.
for you. Over there.
Thank you very much. In terms of market efficiency, it's really interesting what all of you have said. I mean, Oxygen is talking about having different aspects of the market with the premium market and segregating it. Other aspects of the structure seem to be pushing towards standardization of the market for efficiency. When you look at how other markets have developed over the past 30 years, for instance, the emerging markets trading community general in debt and then in equities, it seems that you have standardization in the markets and efficiency in the markets driving volume, driving confidence in those markets. And how do you think that impacts how you see the voluntary carbon markets developing? Because all of you have different aspects of it which all sound compelling.
I think that's a very good question. And actually had liquidity as well, a huge volume of buyers and sellers willing to trade to the equation. Who wants to take that first?
I can begin.
Yes.
Totally agree. It has to standardize, standardize, standardize. And beyond that, we also have to coordinate. So we have been doing from our side with the standards from Voluntary Carbon Markets is to closely coordinate with the other standard setters. So we have launched even a couple of years ago what we call the end-to-end integrity framework. So alongside SBTI, ICVCM, CDP, Women Business, really understanding the role each one of them play, and coming even to a more detailed approach. When we developed the Claims Code of Practice, we agreed on a common glossary. Let's say this is complicated enough. Let's at the very least, speak the same language. So we were circulating the terms and said, is this definition aligned with what you're saying? Because otherwise it's just not helpful that we keep coming with different terms that sometimes mean the same thing or not exactly the same thing, but quite similar, and nobody understands it. So it goes to that level, the attempt of trying to leverage knowledge and provide something standardized for the market.
Thank you very much. Anyone else wants to? Right. Do we have further? Yes, we're going to try to take the 3 questions, but we are running out of time. Yes, please.
Hi, thanks very much for taking the question. You've spoken about integrity quite a lot, and the market talks about integrity quite a lot, and talks a lot about standardization and the importance of that. Obviously that leads to almost like a commoditization of carbon. And I think what Rich is saying is that really, I may be misinterpreting, but you managed to get £125 for a carbon credit, which was really so that the carbon was actually just like the currency. It wasn't really. It wasn't about the measurement of that currency. It was much more about the story, the people, how it impacts the local community, etc. So where is the line between this integrity of measurement and the integrity of the people behind it? There seems to be quite a confused area.
Thank you very much. Rich, you've got 1 minute, please.
£35 a tonne buys you the measure, the standardisation and the integrity. £90 comes from the story, the charisma and everything else associated with it. Every single thing the far more eloquent than me people on this panel have spoke about, we need to get anywhere near solving climate change. The problem is globalisation, standardisation, commodification, nail that one, doesn't bring the investment in and the money in because it'll go elsewhere. We need to get to that point, but for the next 10 years, we need to excite the hell out of institutional investors and VCs and everyone which will throw money at this problem to create some of that solution. If it ends up being $5, $10, $15 a credit, no one's coming because there's not a return on it. In Scotland and England, you need somewhere between 75 and 90 pounds a tonne to break even at a high quality product, assuming you have to buy the land. So unless you're north of that, it's not going to work.
Brandon. Yeah. I saw 2 hands. There's someone at the back there, and then we shall take this final question there.
Hi, this is Elisa from Imperial College. I'm just wondering what you can comment related to the verified carbon standard. I know that there's been some claims that reducing emissions and deforestation and degradation type of project hasn't worked. And there's, I think, a few publications in Science and other venues claiming that the projects basically didn't offset as much as they claimed, and whether the carbon standard has changed or has been revised as a result of these findings.
This is the quality issue again. Anna Carolina or Mira, just quick thoughts.
Oh, well, I'm not gonna comment on another organization, but definitely I think what's important to be highlighting is that yes, unfortunately those projects took place. Scrutiny is absolutely necessary in the market again to raise awareness and to make sure the quality is in there and the integrity is also ensured. Some think that when we started scaling the idea of companies committing to net zero, that those projects became more evident, that they have always been there, but that nobody was really paying so much attention to it, or they weren't exactly buying so many credits from it. The intention is that I've seen some, couple of years ago, a very interesting graph showing the quality, or let's put the low quality, of carbon credits that have been purchased through the last 10 years. And the idea is that if what we're putting together now in the market with guidance from VCMI and ICVCM together, and considering the cycle of projects, we should see something completely different in 7 to 8 years. So there is a transition phase. Again, of course, right after ICVCM publishes the CCP, you don't have CCP labeled immediately available in the market. So we've developed an interim phase. So it is a transition phase to get there, so that at some point, in our case, we're saying that after January 1st, 2026, no other credits will be accepted beyond CCP and A6.4 credits. So we are driving the market to that point. And ideally, those projects should be completely excluded.
Thank you very much, Ana Carolina. That's all we have time for. My apologies, Rich. I'd like to thank the audience for having stayed with us throughout this whole session, and this brilliant panel as well for your contributions. Naomi, Mira, Ana Carolina, and Rich, thank you very much.
Thank you.